Welcome in to Kick in the Rear podcast, episode 15. My name is Joe Yarshin. Today we have an extra special episode of the podcast because we are reviewing my favorite book of all time, Rich Dad, Poor Dad by Robert Kiyosaki. Robert Kiyosaki owns the Rich Dad company. He is a financial literacy expert. He is the top personal finance book of all time author of this Rich Dad Poor Dad book. And he has just so much impact in real estate, investing, personal finance. You can do no better than the teachings of Robert Kiyosaki. In my opinion, I think a lot of finance and real estate people would agree that he definitely has a foundation of education that's unparalleled. So without further ado, let's get into it. Starting off with the intro of Rich Dad, Poor Dad, he states that having two dads offered me the choice of contrasting points of view, one of a rich man and one of a poor man. So in this introduction, he goes deep into the two different influences that has shaped his financial career and a really good personable story. I'm not going to spoil any of it. So let's get into chapter one. In chapter one, the number one rule, he says, the rich don't work for money. The poor and the middle class work for money. The rich have money work for them. I'm going to review some of the back end of this chapter, review some quotes he says that I think were really great, and then some of the remaining questions that he asks you at the end of each chapter. So he says the poor and the middle class work for money. The rich have money work for them. Like I said before, life pushes us all around. Some people give up and other people's fight. A few learn the lesson and move on. They welcome life pushing them around. Stop blaming me and thinking I'm the problem. If you think I'm the problem, you have to change me. If you realize that you're the problem, then you can change yourself, learn something, and grow wiser. When it comes to money, most people want to play it safe and feel secure, so passion does not direct them. Fear does. Most people given more money only get into more debt. Love these quotes. They keep going on. I don't have time to go into all these quotes, so I'm going to just try to review the top ones here. In lesson number 2, chapter 2, he says, why teach financial literacy? It's not how much money you make, it's how much money you keep. Great graphics in page 70, 71 and on. He discusses what income statements are, what income and expenses look like, and then a balance sheet. If you're unfamiliar with these terms, he explains every single term in detail in the back of each chapter and throughout the chapter. But he says what a balance sheet is, what assets and liabilities are. Assets put money in your pocket. Liabilities take money out of your pocket, very simply. Some of the quotes from this chapter I'll get into next. Before that, though, he says that the rich buy assets, the poor only have expenses, the middle class buy liabilities that they think are assets. So let's see here. Yes. So it's not how much money you make, it's how much money you keep. Intelligence solves problems and produces money. Money without financial intelligence is money soon gone. Rich people acquire assets. The poor and middle class acquire liabilities that they think are assets. So the term definitions he reviews in this chapter, he states what a 401k is, what an asset is, something that puts money in your pocket, a balance sheet, cash flow, financial aptitude, the golden rule, which is he who has the gold makes the rules, income statements or profit and loss statements, liabilities, mutual funds, and Social Security. In lesson number 3, mind your own business. The rich focus on their asset columns while everyone else focuses on their income statements. Financial struggle is often the result of people working on all their lives for someone else. Start minding your own business, keep your daytime job, but start buying real assets, not liabilities. So at the end of chapter 3, some of the quotes in this one: to become financially secure, a person needs to mind their own business. Financial struggle is often directly the result of people working all their lives for someone else. Many people will simply have nothing at the end of their working days to show for their efforts. One of the main reasons net worth is not accurate is simply because the moment you begin selling your assets, you are taxed for any gains. $1 goes into it, never let it come out. Think of it this way. Once a dollar goes into your asset column, it becomes your employee. The best thing about money is that it works 24 hours a day and can work for generations. Love this. Some of the terms, the key terms he describes here, we have a bond, what an entrepreneur is, a financial statement, what stocks are. In lesson 4, he says the history of taxes and the power of corporations. He says, my rich dad just played the game smart, and he did it through corporations, the biggest secret of the rich. My rich dad did not see Robin Hood as a hero. He called Robin Hood a crook. He looks at the corporate income statements, personal income statements, and personal balance sheets and correlates all three and how they relate to each other as far as your personal finance. He states, if you work for money, you give the power to your employer. If money works for you, you keep the power and control it. Each dollar is my asset column. Was a great employee working hard to make more employees and buy the boss a new Porsche. That's one of those quotes in page 130. I thought that was funny. Financial IQ is made up of knowledge from 4 broad areas of expertise. He states that number 1 is accounting, number 2 is investing, number 3, understanding markets, and 4 is the law, which tax advantages and protection from lawsuits. And then in the study session in the back, chapter 4, again, some of these quotes here. Every time people try to punish the rich don't simply comply, they react. They have the money, power, and intent to change things. They don't just sit there and voluntarily pay more taxes. If you work for money, you give the power to your employer. If money works for you, you keep the power and control it. The terms in this chapter I thought were very great. Again, in Kenny's book, he talks about the 1031 exchange. Robert goes into that as well. He discusses corporations, financial IQ, and financial literacy, which the definition of financial literacy, the ability to read and understand financial statements, which allows you to identify the strengths and weaknesses of any business. In lesson number 5, the rich invent money. Often in the real world, it's not the smart who get ahead, but the bold. And then he says you can play Cash Flow Classic on the web at www.richdad.com and learn how money works. That's his board game. I know several people that have played this game and told me to get it. It's something I plan on getting so that I can play it at home with my family, but it's kind of like Monopoly on steroids. It's a very in-depth financial game that kind of explains cash flow. It's in the title. So games reflect behavior. They are instant feedback systems. So if you play this game, it'll help you understand the concepts of this book. The single most powerful asset we all have is our mind. If it's trained well, it can create enormous wealth. On the Rich Dad platform, Robert talks about this all the time. People ask him, what should I do with my money? How should I invest my money? He always says, use your brain, think for yourself. And that's the most important thing you can do in your investing is to get educated, more so than what vehicle of investment it goes into, is understanding how the vehicles work through your education. The problem with secure investments is that they are often sanitized, that is, made so safe that the gains are less. It's not gambling if you know what you're doing. It is gambling if you're just throwing money into a deal and praying. This is a great reflection of what's going on in the market right now. Have to evaluate each and every deal in and of itself and not pray that the numbers work. The numbers have to work. It has to be cash flow positive. He says great opportunities are not seen with your eyes. They are seen with your mind. He discusses if you want to be the second type of investor, he talks about on page 166, you need to develop 3 main skills. Find an opportunity that everyone else missed. raise money, organize smart people, mastermind. So at the end of chapter 5, a few of the quotes here. Rich people are often creative and take calculated risks. Chapter 6, work to learn, don't work for money. So again, he states job security meant everything to my educated dad. Learning meant everything to my rich dad. So job security, he talks about this on his Rich Dad Radio platform all the time. Job security it's an illusion sometimes. So you have to be well rounded in your financial education so that you can prepare for the worst case scenario, whether that's losing your job or a market downturn, a market crash, unforeseen financial disasters. So I think that this book really opened my eyes up to being prepared for the worst case scenario. Not preaching anything, but I would say that it helped me understand better. So another quote, page 182, you want to know a little about a lot. JOB is an acronym for just over broke. Love that. So going to the main management skills needed for success, he says, are management of cash flow, management of systems, and management of people. At the end of chapter 6, a few of the good quotes again. Job security meant everything to my rich dad, like I said before. I'm constantly shocked at how little talented people earn. I recommend to young people to seek work for what they will learn more than what they will earn. Life is much like going to the gym. The most painful part is deciding to go. Once you get past that, it's easy. The gym's never easy, by the way, but I still like the quote. Chapter 7, overcoming obstacles. The primary difference between a rich person and a poor person is how they manage fear. He says the 5 reasons that could help you produce a large cash flow. The reasons for not achieving are fear, cynicism, laziness, bad habits, arrogance. So he discusses how to overcome fear, how to overcome cynicism, how to overcome laziness, how to overcome bad habits, overcoming arrogance. Actually, I'm going to read part of this because I think it's really great. He says there are people in the world of money, finances, investments who have absolutely no idea what they're talking about. Most people in the money industry are just spouting off sales pitches like used car salesmen. When you know you are ignorant in a subject, start educating yourself by finding an expert in the field or a book on the subject. I love that quote because he reinforces a topic from a previous book review on who, not how. So knowing who the expert is in the field sometimes is way more important than knowing how to fix the problem yourself. So in the beginning and end of this chapter, lesson 7, high level overview of all those concepts again. But another quote here, getting out of the rat race is technically easy. It doesn't take much education, but those doubts are cripplers for most people. I can't afford it causes, or saying I can't afford it causes sadness, a helplessness that leads to despondency and often depression. How can I afford it, however, opens up possibilities, excitements, dreams. I really like that as well. No victim mentality. And then the definition in the back of this one, he says as a stop. So a stop is simply a computer command that sells your stock automatically if the price begins to drop, helping minimize losses, maximize gains. Chapter 8, getting started. He says that there's gold everywhere. Most people are not trained to see it. Find a reason greater than reality, the power of spirit. Make daily choices, the power of choice. Choose friends carefully, the power of your associations. I hear this from all entrepreneurs and different walks of life is like you're the 5 people you spend the most amount of time with, or you're the average of the 5 people you spend the most time with. Master a formula and then learn a new one, the power of learning quickly. Pay yourself first, the power of self-discipline. The 3 most important management skills necessary to start your own business of management of cash flow, people, and personal time. He reviews, again, income statements, balance sheets of people that pay them first versus people who pay everyone else first. And then Another quote here, the sophisticated investor's first question is, how fast do I get my money back? The end of that chapter 8, there's a breakdown of all these income statement, balance sheet graphics. It's very nice, gives a good explanation. 90% of the population buys TV sets and only about 10% buy business books. Love this. If you're tired of what you're doing or you're not making enough, it's simply a case of changing the formula via which you make money. People who lack internal fortitude often become victims of those who have self-discipline. Man, this whole book is chock full of these knowledge bombs, knowledge truths. Love it. Chapter 9, he says, still want more. Here are some to-dos. So he starts with stop doing what you're doing. In other words, take a break from what you're doing and assess what's working and what's not working. Look for new ideas. Find someone who has done what you want to do. So if you're looking to be a real estate expert, find someone who's a real estate expert and learn from them. Take classes, read and attend seminars. So he's a big proponent of going to these masterminds and things like that. Alex Ramosi talks about that on his podcast as well. He says, make lots of offers. So if you're trying to get into real estate, make lots of different offers. Yeah, love that chapter as well. So in the study session in chapter 9, he breaks down all of those things I just said, but then that's the last chapter into the back of the book where he talks about final thoughts. So overall, I would say 100 out of 100, 10 out of 10, A+ book. It's the one that got me started in my real estate investing journey. It's the book that got me into financial literacy, into every financial topic, really, that piqued my curiosity. So I love Robert Kiyosaki's vision on education and kind of taking full responsibility and accountability for your future and not being a victim of your circumstances and educating yourself first and foremost. And you don't need a PhD. You don't need a medical degree. You don't need a law degree. Those are great degrees to have for employees. They're not necessarily necessary to be wealthy, though. And so he kind of takes a really different approach, which I love. You know, every person's different. Everybody has different strengths, and he highlights that in a masterful way. So if you like this book review, please like and subscribe. And this is the only book I would say you have to buy it. Like if you're going to buy one book ever, buy this book. It's so good. I will see you next week. Bippity boppity investment property. Let's go.